Gold is making all-time high after all-time high. But what if I told you that's actually a very good Bitcoin buy signal? So historically, when gold breaks out, but under the right macro conditions, Bitcoin tends to follow that, but with a bit of a lag. My own trading script, which I've created last week, triggered a very, very rare buy signal, and it happened only twice in history. And basically, this is the reason why I wanted to create a video to show this to you guys, to show how the Bitcoin versus gold lead lag correlation works. So let's dive right into the video. Looking at the correlation between Bitcoin and gold, we see that the correlation is basically non-existent in the beginning. We see even a negative correlation, sometimes positive, sometimes negative. And the reason being, back then, Bitcoin was just super small. It was a small asset, and it wasn't really affected by these big macroeconomic moves like it does at the moment. At the moment, Bitcoin is super macro correlated, but back then that wasn't just the case because Bitcoin was just too small. But then starting near the end of 2019, the beginning of 2020, we see this positive correlation emerging. And the reason being is just in periods of market stress or monetary expansion, that's when gold and Bitcoin tend to move together. And if you just look at the Fed balance sheet, when the Fed stopped QT, as you see here, September, October, November, and they started QE again, that's when this correlation started to be there. And I've read a lot of research papers to prepare myself for this video and the article I wrote. And statistical analysis show that the correlation is the strongest when certain macro conditions align. So let me explain these certain macro conditions. So the first one is the falling real yields. And this is from the Fed. And what it means basically is when real yields drop, the opportunity cost of holding non-yielding assets, like for example, gold and Bitcoin, decreases. So that's when investors shift into monetary hedges. So speaking of monetary hedges, the second one is monetary inflation. And monetary inflation, how can you measure that? Well, the best way how to measure, in my opinion, monetary inflation is by looking at global inflation. And this is the global liquidity, by looking at global liquidity. And this is the global liquidity cycle. This one is from Michael Howell. If you guys don't know who Michael Howell is, I'll probably put at the end of the video my video of my interview with Michael Howell. He's the father of global liquidity. He made this global liquidity cycle. And at the moment, global liquidity is rising steadily and has reached an all-time high just today of $177.2 trillion. The fourth thing we need with these certain macro conditions are a falling DXY. The fifth thing being is falling long-term bond yields. This just signals expectation of lower growth or inflation or just central bank easing. The sixth one, and this is maybe the most important one, is during macro uncertainty or systemic stress. So for example, COVID, let's say, Bitcoin's correlation with gold rises to plus 0.5 or even higher. And we see this last 3 years, the 365-day correlation with Bitcoin and gold is basically almost above 0.7. And that's statistically super significant. And this is a sign that investors increasingly treat Bitcoin as a monetary hedge or a safe haven. I don't know if some people will not agree with me, but this is just what the correlation is showing. But then, of course, it's not easy. It's not always easy. Investing is difficult. And the thing with Bitcoin is it's regime dependent. So what do I mean by that is Bitcoin's identity is shape-shifting. So meaning, it fluctuates between acting as a speculative asset, so a high beta asset during bullish equity phases, and then sometimes it acts as digital gold during fearful inflationary periods. So that's why it's not easy. That's what I mean by Bitcoin is shape-shifting. And the challenge, of course, is knowing which regime we're in at the moment or when it might switch. But then the good thing is, because there is a lag, we don't have to guess. So statistical analysis shows that there is this 90 to 180 day lag. Well, basically, it's the best correlation of the lead lag is 120 days. This is the big yellow line. The second is from 100 days to 150 days. That's a bigger opacity. And then the lower opacity is the 90 to 180 days. Also, like I said, Bitcoin is regime dependent. So this lead lag only works when these certain macro conditions align. Like I said, in speculative times, Bitcoin just moves on its own. And I also made my trading script just based on these macro conditions. It was not easy, but I tried to code everything into the script. So when the DXY is bullish, when the yields are falling, when liquidity is rising. As you know, TradingView doesn't really have a very good global liquidity indicator. So I've just used M2 as a liquidity proxy. M2 is global. M2 is only 40% of global liquidity, but it's the best we have. But yeah, we know global liquidity is rising, so it's fine. Maybe let me explain how my script works. So the entry and exit rules are pretty simple. So there needs to be a gold breakout, and I've measured this in my script with a close above its 50-day moving average. And then it triggers a buy, and here it wanted to make a buy, but it says wait on lag. And that's important. It needs to be within this 90 to 180 day lag lead window, or it won't trigger. And then, of course, entry is only allowed when this aligns. So for the certain macro conditions, like I said, I made when the DXY needs to fall, the yields needs to fall, and liquidity needs to rise. If this all three doesn't happen, the buy doesn't trigger. That's why I said in the beginning that the buy signal was super rare and only triggered twice in history, because all these things that align don't happen all the time. And then the exit is when or either gold weakens or the macro support. So these three disappear. If you guys want, I've posted this script in my own Discord. This, for example, this is only the lead zones. To me, this is already enough, because more you don't need to know more. Solely based on this, you can probably already trade, because if you know the lead is there, then you can trade. And the other script is with the macro triggers built in. But yeah, you can just use these macro triggers for yourself. You can see for yourself if global liquidity is rising, if the dollar is falling. So there really didn't need to be a script, but for me, it's just easy to keep an eye on. So if you guys want that, it's in my Discord. At the moment, like I said, it's for gold members. To be a gold member, you need to use my Bybit link and deposit $10,000, and then you're a gold member. But to be honest, I don't really care that much. So if you just join my Discord, send me a DM. I'll gladly send you the script, so don't worry. Yeah, so let's look at the conclusion. So I've made an article about this. And then the question, of course, is gold a reliable leading indicator for Bitcoin? And as I've explained in this video, the answer is nuanced, but it's yes. Gold leads Bitcoin under the right macro conditions. But of course, if you saw my altcoin video, I always look at a lot of metrics together. One here, the correlation isn't even bulletproof, and I would never make investment decisions based on one metric alone. But it's a very good metric nevertheless. So I think I've made a quote about it. So gold's move isn't a standalone green light for Bitcoin. It's one part of a broader macro mosaic. It doesn't give you the full story, but it's often the first chapter worth reading. So I think we can close the video with this. The second chapter worth reading is probably global liquidity, because I think Bitcoin and global liquidity follow extremely well each other. So that's why I'm probably going to put it here or something. My video with the interview, like I told you guys, with Michael Howell, the father of global liquidity. We briefly even talk about the lead lag correlation between Bitcoin and gold. So that video will probably interest you a lot. So if you like this video, don't forget to like this video because I think it helps more people find it. Make sure to watch my video and yeah, join my Discord and bye guys.